My name is Fodera, and I'm going to tell you everything you want to know about SBA loans, including all the questions we're constantly asked. So I've been in small business lending for the past 15 years. I founded Integrated Business Financing, and we have helped our clients with a ton of SBA loans. So I'll get right into it. First, there's several different types of SBA loans. But before we get into what types of SBA loans there are, right, I'd appreciate if you followed and subscribe to the channel. Second, understand how they work. SBA loans are guaranteed 80% by the Small Business Administration. So what that means is there are certain banks that are allowed to or have the opportunity to process SBA loans, and they either process a 504 or a 7A. So basically working capital or to buy a property. And from there, once they approve it, they should send it to the SBA. The SBA signs off on it and guarantees it, right? That's why when you speak about SBA loans, a lot of people have different experiences. A lot of people are confused, or everyone equates an SBA loan to the EIDL, and that was really a disaster relief program. That the SBA, that was the first one they actually underwrote and financed themselves or funded themselves. So let's get into, now that you understand the basics of how they work, let's talk a little bit about what you should use them for. And then we'll break down each loan, and then we'll break down some beta programs, some really cool, interesting beta programs that are going on right now, and then get to any questions that you have. So first, any type of SBA loan should always be used because it's a long-term line to, one, consolidate debt. So you have a bunch of credit cards, you have a lot of payments, you have all these things that accumulate over the course of running your business. You can use an SBA loan to consolidate debt because they go out at least 5 to 10 years. And they always have one of the cheapest rates, if not the cheapest rate out there. 2, you can use it to purchase equipment, although I prefer equipment financing to do that. You can use it to buy a business. A lot of people use an SBA loan to buy a business. You can also use it to buy a building, to purchase a building, to do upgrades. Any of these things that are going to make a meaningful difference in your business. And why does it make sense to use an SBA loan for longer term uses? Well, because an SBA loan goes out, like I said, 5 years at the shortest. Some of them go out 20, 25 years if you're purchasing a building. Okay. Now that you understand what you should use an SBA loan for, let's talk a little bit about some of the basic qualifications, right? So for the most part, you need to be in business at least 2 years, if not 3. And you want to have great credit. When I say great credit, the SBA says 680, I'm going to tell you 700 or better. You need strong business credit as well. So what happens is when you apply for an SBA loan, okay, they check your personal credit and then they do an E-Trans score. The E-Trans is made up from several different factors. That's an internal scoring model from only the SBA. However, we've gone through the process enough that we know it has to do with business credit primarily, maybe a little bit of personal credit. So that's another important factor. Also, if you're going for a traditional 7A or 504, they want to see that the company is profitable, right? So if you don't claim profit, that's problematic. Typically, the rule of thumb with the SBA is for every $45,000 in profit that you claim, okay, or you pay taxes on, you can get $350,000 over 10 years. Those numbers change, obviously, if you're going to buy a building with it, because when you buy a building, whether it's a 7A or a 504, they're going to go out longer, 20 to 25 years. So those are just some of the basic qualifications. So strong credit, you need good profit margins, and I'll get into a beta program we have where they don't look at profit, they look at percentage of total revenue. The challenge is, I'll get to it now. There is a beta program out there right now, and this is the most popular program that our clients are asking us for. As long as you have the credit criteria and you have 2 business tax returns and you did 500,000 or more, you can get up to 150,000 from the SBA, usually in 3 to 5 weeks. So basically it's a 7A, it's an SBA 7A loan, but it's expedited. So they go off of 30% of your top line revenue. What that means is if you did 500,000 last year in total sales on your tax return, you can qualify for the full 150,000. Let's say you did 2 million. Well, you should be able to qualify for 600,000. However, you can apply every 3 months and take out tranches of 150,000 for a maximum exposure of 450,000 on that program, right? That's a beta program. Only 3 banks are doing it, and it's very popular because they're testing it out because it's more efficient. A traditional SBA loan can take anywhere from, let's say, best case, 30 days. Worst case could take, 6 months, especially if you're buying a business or buying a property. So that being said, the fact that we can do smaller, quicker ones in, 4 or 5 weeks, that's a big deal. It's lending to businesses the way they need to be lent to. Okay. Now let's go back into some of the differences. The 504 is primarily used for commercial real estate when you're buying a building. Now, what qualifies as a building? Well, you have to occupy 51% of it, meaning if you're buying a big office, it's very important that you're going to take up, if it's 10,000 square feet, you need to be in at least 5,100 square foot of it. If that's the case, you can qualify to do it with a 504, or you could do it with a 7A. The reason a 504, you can't prepay, you're fixed in that rate. If you did it a 7A, you're roughly going to get the same terms, meaning you can still go out 20, 25 years. The difference is you can refinance a 7A, and a 504, you really can't. You're kind of stuck with it. So if rates are high and you still want to buy a building, I would suggest utilizing a 7A. If rates are low, then maybe a 504 makes more sense. These are things that a lot of people don't know, and they make a difference when you go through the process. Right now, another question I'm asked, like a 7A, that's a great working capital. You could still use a 7A to buy businesses, equipment, basically consolidate debt, anything like that. Where collateral comes into play, okay? Now that we've gone through the 504 and we've gone through the 7A, we even went through the beta program. Here's some of the most frequently asked questions that we see about SBAs. If you have multiple partners, who needs to be on the application? Well, anyone that owns 20% or more has to be on the SBA application. That's vital. It's important. You can't really get around that. Next, when does collateral come into play? And are these personally guaranteed? These are personally guaranteed. It's an SBA loan. Where collateral comes into play is typically around 350 or higher. And then when you're doing a 7A, a lot of banks don't like to do traditional working capital deals. What that means is they don't want to put more than, let's say, 500,000 in the bank account at one point. So what they do is they look for hard costs. Are you purchasing a building? Are you renovating? Are you buying equipment? Like what other things are detailed or needed? What is the use of funds breakdown? So if you're buying a building, you can go up millions. That's fine. If you're renovating, as long as the construction costs make sense, you can get above 500. But 500 is really where collateral is going to come into play. All right. The next thing that I am constantly asked about SBA loans is what constitutes collateral? Well, one of the forms that you have to fill out is a personal financial statement and the asset list from the SBA. So the SBA is going to pick what your collateral is. Okay. Now, how do they determine what's a pledgeable asset or how much collateral you have? Well, they typically want to secure up to the value of the loan. All right. And what they do is, let's say you have $5 million worth of assets. On those assets, let's say you owe $3 million. Well, they're going to first off value your assets at 80% of current value, which means those $5 million in assets that you own, whether it's property, real estate, equipment, they're going to value that at $4 million. Once they value it at $4 million, you still owe $3 million on it. So they're going to take out the liabilities, which would be you have your $4 million, they subtract $3 million, you're left with $1 million in pledgeable assets. And so they're going to pick and choose out of those, what they're going to ask. So if it's a $500,000 loan, it should be pretty easy. If you were asking for, let's say, 1.5 million, that's a little bit more challenging. Other things to consider too, and this is really important, when you're using an SBA loan to buy a business, you have to understand they're looking at, one, what's the value of that business that you're purchasing? Two, what's the value of your current business if you have one? What assets are you buying in the new business? What assets do you currently have? So if you're purchasing a business, they want to make sure, one, that business has the cash flow to pay the loan back. Two, they want to make sure that if something goes wrong with that business, you have the cash flow to pay the loan back. And then they also want to know how much of their loan is secured. Like, what are the assets of the business you're buying? What assets do you currently have? These are all items that really need to be thought about prior to bidding on a business. Next, when you're using an SBA loan to buy a business, I can't stress enough, you have to make sure you have significant amount of due diligence. Usually I say, if you send out an LOI, which is a letter of intent, try to make sure that you have 120 days of due diligence. This way you can get everything you need, get it submitted into the SBA. I say the same thing if you're using an SBA loan to buy a building. All right. When you are ready, you should send in all your paperwork, and the loan really can't, the underwriting process can't start if you're buying a building until they have the signed agreement. And if you're buying a business, the underwriting process can't start unless you have a LOI, right? And from there, that's when the clock should start, and you get 120 days. Otherwise, you could be putting the whole deal, whether you're buying a business or you're buying a property, in jeopardy. All right. So these are some of the things that I'm constantly asked, and that's why I'm bringing this out in the video. The next, what if you have a criminal record or you defaulted on government debt? So SBA loans, if you have a felony, well, you have to, one, disclose it, and two, that may prevent you from getting an SBA loan, especially if it's white collar. Two, if you have defaulted on any type of government debt, including student loans, that could put your SBA loan in jeopardy. You probably won't get approved. So these are all things that can trip you up on the back end when you're going through the process. However, my thoughts, an SBA loan is the gold standard when you're trying to get business financing from, let's say, $150,000 up until a couple million. There's better programs above where the SBA picks off, and they're a little bit more challenging to get in. However, we also do those as well. So here's my advice. If you're looking to grow your business, if you're looking to consolidate debt, if you are looking to buy a building or anything that would require an SBA loan and you have questions, reach out. I'm happy to work with you. Happy to answer any questions you have. My entire team is knowledgeable on SBA loans because we've been doing it for quite some time now. Appreciate you guys. Remember, give us a follow, subscribe to YouTube. We're always coming out with new information to help you. Thank you.